All right, so just so you guys know, I do these each week on Sunday, or if, like last week, there was a holiday weekend, so we did it on Monday evening, but I do these the night before we begin the next trading session, right, or the next, trading week ahead of us. In tonight's session, I aim to prepare you all technically, right, from a technical analysis perspective, as well as emotionally, and hoping to refine any rules that you may have loosened up over the weekend. So, I have some notes here, right? Takeaways from last week. I just wanted to take note that there were trend days, but do not let that stray your focus from trading your edge versus trading trends that are not there, right? So what I mean by that is this: many retail traders experience this. I feel like quite often. And let me remove this. All right, and what I mean by that is this. All right, so we get a very simplistic trend day. I call these days where they pass out money, right? Now, the following day, retail traders are thinking what? They're thinking that price will continue to move up, right? That we're just, it's confirmed, we're going up, right? And the following day, what happens, right? There's a big dump. It actually gives back majority of its gains from the day prior. Although it was, I do believe, I don't know if it's from this base or whatever. Yep, right there. From the low to the high of the trend, right on that 50% retracement. Look at what's being held. I mean, do you guys see that? From this spike up of the move, 300 or 299, all the way to 312 or 313. This kind of golden zone right here, this 50 to 61.8 fib, has been held since, May 27th. Right? And again, and again, and again, and again on Friday, right? So, do not allow yourself to go into any sense of bias just from the previous day. I mean, look at what happened on Friday, right? Thursday, it was ripping up, seemingly simple day, right? Many retail traders getting chopped up here prior to the simplistic trade or trend. And the following day, right, it sells off all in pre-market, and the continued sell-off right back down to that 50% retracement zone that we had talked about, right, that golden area. And, traders who were like, hey, I'm biased towards a long perspective, kept trying to buy calls, obviously would have gotten stopped out or lost a large sum of money eventually at some point, right? We actually did fairly well on Friday, and that was solely due to the fact that I'm a price action trader above all else, right? I don't care if the market's going up, don't care if the market's going down. I trust my skills enough to be able to gauge price action and read it to the point where I can take advantage of it so that I can capitalize, right? Moving forward here, focus on your 5, 10, and 15-minute trends on the intraday. Do not rely on your EMAs, right? We are price action traders above all else. You've heard me say that 3 times already within the 10 minutes that we've started this session, right? Focus on that. EMAs are for added confirmation, right? So the 10-minute, you could be like, hey, that's a clean 10-minute 9 EMA rejection, right? But on the 1 minute, tells a totally different story, right? Very difficult to trade this kind of trend. There are scalp opportunities, right? Knife down, first retracement, hit it, only stop out if it closes above the 20 EMA, and you get a nice lower low break for a scale out right down here. And then on the flip side, right, inverse head and shoulders, right shoulder or left shoulder, head pops up, pulls back, right shoulder, EMAs cross. There's an entry there and an entry here, right, on the 1 minute. But, right, if you were solely relying on that or tunnel vision on your smaller time frame, right, you missed out on the trend that was at hand, right? Nothing closing strongly over the 5-minute 9, and definitely not over the 20 EMA. Nothing closing over VWAP, right? There's a larger picture at hand here, and many newer traders are getting caught in the habit of relying on that 1 minute or really being straight away from the actual trend that's at hand. MG says here, many people ask me and then are surprised to hear my answer that I basically only am trading one ticker. Can you explain to them that even you started with only trading the Qs at first. And some of the benefits you found doing this, I find that we come to large caps to get away from chasing all of the small caps, only to try and constantly sort through new tickers again. So that's actually a great comment there, MG, and something that many traders are taking for granted, right? I left small caps solely due to the fact that I was tired of looking at which sector was going to rotate and trying to predict the next sector. I hated the small cap pumps. I was listening to Benzinga Charlie every morning at 7 a.m. You know, I was all over the place, right? I'm a simplistic person. I trade very simplistic strategies and have proven to you all time and time again that you can make a lot of money just by trading these basic strategies, right? Is that not what anyone would want? So, with my transition to large caps, I wanted to remain simplistic. I traded QQQ and really mainly trade QQQ, I'd say 80 to 90% of the time. Oh, you're good, MG. Yeah, no, you're fine. That's a great point, though. I do that because it gives me a great kind of analysis of the market, right? It will kind of dictate what other tickers are doing, or obviously what kind of trends we should be trying to capture. And it removed a lot of the noise, right? I was able to then chart QQQ every day, every evening, trade it every single day, get used to the spreads, get used to, the order execution for the different strikes and different expiries, all of that, right? You need to be able to have a ticker that you can master, or at least get close to mastering, so that you're very comfortable. For me, when I wake up, right, success to me is not a monetary amount, right? Success to me is waking up and enjoying what I'm doing, right? Loving exactly what I'm doing. And I love the fact that I can wake up, trade. I'm going to show you something. I wake up and I chart the same things every day. Right? 6-3 pre-market plans, QQQ, AMD, NVIDIA, SPY. Well, let me just go back here super far. Look, we'll go back to April. QQQ, AMD, NVIDIA, SPY. Okay, let me go back a little further. Right? Let's go to March. Right? QQQ, Tesla, AMD, NVIDIA. QQQ, Tesla, NVIDIA, AMD. Right? It's the same things over and over. And that's why I'm able to execute these rather quickly and without any hesitation, because I know how these tickers will react. And my response to these tickers is not a surprise, right? I'm able to really delegate whether or not I want to be in this trade or if I want to cut it. You guys will also see within the trading floor, right? Right here, 309 calls, risking low day, 10:57 a.m., right? When do I cut the calls? 3 minutes later. Well, let's look at another thing, right? Let's see. Okay. 309 calls, risking low day, 10:33. 10:36 a.m. 3 minutes later, I cut them. Okay, right here. Trying through, where's the other calls? I don't know, right? But you can see I cut these rather quickly because I know through experience, if I'm not able to cut my losses quickly, I don't care if it's a Qs, I don't care if it's Tesla, I don't care if it's AMD, Apple, whatever, it will punish me. And I am here to manage risk and be a better loser, right? So, going through the lesson, pullbacks only, guys, right? Pullbacks and retests only, as these will allow you the lowest risk, right? Or lower risk, right? And when I mean lower risk, I mean that, instead of, let's say, hitting puts here, right? Or not there. Hitting puts on this kind of FOMO trade, right? When it pulls back, risking the EMA, right? You'd rather take it there. Sure, this may be, since it is aggressive, you might get in a little cheaper or a little bit more expensive. And these may not be a huge difference in terms of entry price, but this is what is consistent with day trading, right? This allows me to take pullback entries 30 minutes from now, right? 2 hours later, a week later, months later, right? I ingrain that into my mind, right? Systematically, it is a part of me and it protects me, okay? So, moving forward, For this week, right, I expect tough trading conditions, but I do every week. I expect these tough trading conditions, and this allows me to excel on trend or quote unquote easier days, right? So if I go into tomorrow understanding that it could be a consolidation day, it could be very choppy, we could have, a lot of volatility, whatever, and then we don't experience that, and it's a trend day, and I'm writing EMAs all day, feet up on the desk, hanging out, chilling. Why would you not go into every single day like that, right? Why would I ever go into a day thinking that we're just going to rip up or rip down? Isn't that kind of foolish? Isn't that ingraining bias into your future trading session, and which ultimately forces you to fail? Right? So go into every day thinking that it will be the hardest day that you will trade, and you'll come out on top, right? Or at least a little better. So, one second. So I wanted to touch on some technical things. What do you do in the chop? Trade a different ticker or chill? I trade the chop, right? Now, not all the time. I don't always trade the chop, but there are ways to trade the chop, right? And I will explain that to you guys just now. Okay, so you can see here, you have the high of day. This is the low of day, right? Well, the puts right here, 310, right? You could either trade in the money. You could trade the 310 Ps, right? I mean, you can see this large upper wick here. Nothing closing above VWAP or the 9 EMA on the 5-minute. This created, and the tweezer top, this created a little intraday supply zone, right? Right over 310, 14. So if you were looking at puts, you would have most likely been looking at the 1 to 3 out the money strikes, right? So 309, 308, 307. For this example, let's go with 309. Okay, so the 309 piece. Okay, so 309 piece. Let's zoom in here, go to the 1 minute. Get rid of this stupid theoretical options price. All right, and I actually have this marked because we traded it. Scalped it. Traded the 308s for a little bit longer. This is Thinkorswim. So you can see here, right? Prior to the trend, a lot of traders got chopped up before it sold off rather smoothly, right? So how do you trade the chop, especially trading the open? I always mark my options contracts out so that it prepares me for any kind of instance that I should let's see, for any kind of instance that would surprise me, I would say. So moving forward here, what's going on? What is this? 10:02. Okay, great. So you can see here the open high 9:30, right here 9:30. That's the high of the day. So if you're trading puts, that would be the low on your options contract. I mark that. I always mark that. Now, of course, with theta moving along the way, it will change, right, the floor with the support. But you can see right here at $1.44, okay, that was the low. Well, when it comes back into the supply zone, right, I think Rob was asking about how to enter into these zones. I am looking to take an entry near the high of day for the puts, right? This is actually a new kind of system that I'm looking at, right? A fake out breakout kind of capture. But, you can bid into the zone, right? Bidding into your puts. So, like, let's say, hey, you bid in just right on $1.44, right? Down to the low. That's about 15% from your entry price, right? That's typically what we risk, 10 to 15%. If you notice that the candle does not close above, then you hold this with the risk of the high of day. If you didn't stop out here, don't stop out down here where you have, a good cushion, right? Your stop should be the low of the options contract put day and the high of day on the underlying, right? So, you can bid into the zone. Let's say you get a little bit higher 150s, right? Whatever, okay? You have multiple levels to aim for here, okay? And you can see, if you took it in the zone right around 10 a.m., right here, 10 a.m., 10:01, 10:05, right? $1.50 range, right? You were able to take this for 100% move right here, right? Just on that push down. And all you're waiting for is the lower low break. Now, when you hit the lower low break or a new low a day, I don't care what my position is or whatever, I always scale some out. I scale a little bit. Now, many of you may trail through your 9 and 20 EMA or pivot points, right? Whatever it may be, okay? Let me just make sure that I'm not missing any questions. Support and resistance for any ticker, right? I just did. Yep. So like, all right. So let me show you guys just the directional analysis, right? Kind of what we do every single day, right? So pre-market low, pre-market high zones, previous day low, it gave us a demand zone down here. It came very close to it, right? Those buyers came in a bit aggressively, but let's go on like AMD just to kind of clean this up. I mean, and look at this zone, right? Nothing closing below this with strength off the open. They pushed down a little bit lower, right? I bet a lot of traders got faked out on this, but if I look at it, kind of looks like a mid-candle dip. Yep, right there, right on the mid-candle, the 50% retracement from the low to the high of the previous day's trend. Oh, for sure, Chopper, for sure. Diesel. So, so support and resistance, right? So let me clear this out. Actually, yeah. Well, here, I don't want to clear it out. I'll use a different drawing set. Okay, so you obviously had the previous day high. You can see, right, draw a zone off of the upper wicks. What happened? They reject off of it. Okay, and then we had this support level. Now, when you look at price action, right, look at it like this, right? Ask yourself in a trend, where are buyers stepping in? Okay, so a buyer, right, bought in here, they shove it up, they continually buy, sells off, and the next wave of buyers steps in right here, right? And they hold the support floor right there. Okay, now going into the next day, like I showed you, that's where I got this zone from. Buyers maintain this bid down here, right? Now on a larger time frame, this would be a wick, right? So like, let's say like on the 30-minute, see that lower wick? On the 1 hour, nothing closing below it, right? And something that you guys really need to comprehend, or at least kind of piece together, is, you know, yeah, we trade on smaller time frames quite often, right? But we also need to understand what these smaller time frame patterns mean. Okay, so like if I have, like, let's say, you know, you guys know inverse head and shoulders. So like a left shoulder, a head, and a right shoulder, right? Maintaining a support floor, okay? What kind of candle is that on a larger time frame, right? And this is just an example. What kind of candle is that? Think about this, right? A hammer. Exactly, Gunner, right? It's a freaking hammer. If I was to, you know, make this smaller, or whatever, I can't do that, right? But if I was to bump up the time frame, the candle would look like this. Right? Would it not? So think about that when you're trading. All right, look at this head and shoulders. You see that? Let me go on like a 2 hour. What's the 1 hour look like? Hold on. Damn it. All right, it's on this day. Let me go on like the 4 hour. Right? Large rejection width. Right? And it shoves down. It's a flashing red bar right there, right? So think about that when you are trading, just to kind of piece these patterns together. Traders are always like, oh, you know, I don't believe in patterns, I don't believe in this. I mean, it's price action. If you don't believe in patterns and you don't believe in price action, then you're just kind of contradicting yourself, right? These are just, you know, whether it be in a smaller time frame, larger time frame, whatever, patterns are accurate because one, algorithms, market makers, banks, everything, they trade based off of these price action kind of hot areas, right? Zones or you know, clusters. Okay. So I wanted to touch over a few basic things that I feel like a lot of traders are forgetting, are not piecing together, right? And I said very early on, focus on your 5 and 10 minute, or 5, 10, and 15-minute EMAs, or for trends, something that where you can truly kind of sit back and wait for price action to develop, right? So you can see here, right, on your 5-minute, very clean rejection, right? Add a little bit of confluence. Look at your 10-minute, even stronger, okay? And then you can bump it up to your 15. And you can see it stays within your 15-minute 9 and 20 EMAs all day. Had you taken a short or taken puts near the 20 EMA on the 15, right? You had 1 trade, 2 trades with the confluence here, right? VWAP and the 20 EMA, right? And 3 trades right there. So that's 3 trades on the 15. On the 1 minute, how many trades are presented to you or what you think are trades, right? Probably 200. Probably, 100, 200 trades that you might think are viable. But on a larger time frame, even though this was not a true trend day, this was kind of choppy price action, very volatile, right? A lot of consolidation, whatever. This clarifies and cleans up your trend for you to be able to read, especially later on in the day. All right, so focus on that. Your 5, 10, and 15-minute time frames if you use EMAs, but do not let these time frames or EMAs, sway you from, what is truly at hand, right? Because there are days where, your EMAs don't really serve you any purpose, right? I mean, if you're on a 5-minute, I know a lot of people don't flip to the 15. So, let's look at your 5-minute. This is not helpful at all, right? It's too tight. I always tell you guys to focus on or try to find what time frame EMAs are best being respected, right? What time frame EMAs are best being respected? Is the 5 truly being best respected here? Or here? Or here? No, I mean, not really. Not at all, actually, right? So focus on that. If the 5's not working out, look at your 10, look at your 15, just kind of space these out. Also, I'll stay on the 5 just because I know many of you trade under that, but it doesn't really matter because we're talking about VWAP now. VWAP, guys. Now, before I give the explanation, what are the rules in terms of VWAP, right? What should we be looking out for? Time spent above or below. Yep, exactly. Yep, Gunner and Narboots. Time spent above and below. Also, right, the extension from VWAP. It doesn't always mean that it will retrace to it, but it does act as a magnet. Now, many of you, this is just proper review. And, so many times, how many of you have gone through a trading session, gone through the trading day, logged off after having, a confusing kind of, breakdown of price action, confusing trading session, and been in your review later that evening, been like, wow, that was so simple. Why did I overlook this? Why did I hesitate on this simplistic setup, right? And it's because traders love to overcomplicate things that should remain simple. We all know how VWAP works. And if you don't, it doesn't take long to understand it. All right, so in this, and we can go over multiple days, right? VWAP for me, I always look at how much time, right? Meaning the price action candle is being developed, how much time is spent above or below VWAP. So off of the open, right? Prior to the open, I saw, hey, not a lot of time spent above VWAP. Majority of the time is under it, right? Not even a lot of time spent here or here, right? Doesn't even push above VWAP. Okay, right there, barely pushes above. And once again, doesn't push above. So how could you have capitalized on this early in the morning? Well, like I said here, you had the tweezer top holding price action, the candles below the 9 and the 20 EMA, and nothing closed above VWAP, right? Rather simplistic. All right, and later in the day, when price is very far extended, right, you see this big gap between the candles and VWAP. It tends to act as a magnet when you have a relief cover rally. All right, now this is exactly why chasers get burnt, and it's solely due to the fact that they are left with the scraps. You guys will hear me say that all the time, right? You're left at this point in time. Be careful. You're left with the scraps, okay? Because where did I take entry on my puts? All right, right here, 308 calls, risking VWAP area. Okay, or 308P risking VWAP area, right? Hold on, where did that go? That was, see, it doesn't tell me the time, but it was like right at 10. It had to be like, I don't know, risking view up. It was like right here. Actually, I have it. So right here. So right on this candle, 10:15, and right there we took the 307. So I'll go back to the clean drawing set. So right here and here. Okay. So I took puts trying 308p QQQ risking VWAP area, right? Why would I risk VWAP right there? Well, because I just saw the next wave of sellers just came in pretty strongly right there, right? And if they get taken out, then I get taken out with them. But I'm going to put my money with those guys, right? I'm going to be like, wow, they really just, this is the dip before the possible rip. They just swatted them down again, a fake out breakout over the high of day. I'm going to bet my money with those guys, okay? So, the relationship with VWAP, right? Later on, I get my entry here, and later on right here for the ladder, right? You guys will see me call it out. Right here. I said I'm interested in the 307p ladder, waiting for rejection, 10:47 a.m. And I scaled into the 307p's, risking the 3-minute EMAs at 10:50. Okay, so let's go to the 3-minute, and I will show you. Look at that. Right there. I said 10:50, so it was like right. Oh, it's the same candle. It's a 3-minute. So 10:48 to 10:51. So right here on this candle, I said I'm risking, right? Risking the 3-minute EMAs. So the 9 and the 20 EMA, I'm risking that general area. If it broke above, I'm out of my puts, right? But then I get a ladder. I do not call any more puts out down here, right? Why? Because I'm always aware that there could be a washout, right? Where the shorts have exhausted so much selling that they no longer have the sustaining selling pressure, and they must lock in profit, and they will lock in profit on top of each other, right? Now, I want you guys to really hone in on this, okay? Many of us are, even myself included, I'm like, hey, I'm going to take calls right here, and it's against the trend. It's low risk, right? And many times I do pinpoint the reversal off of that, but many times I also take a small tag, right? 10 to 15% against my opposing position, right? I'll hold on to the, if I'm in puts, trading calls, right? I'll hold on to the puts, get stopped with the calls, ride the trend, okay? Now, many of you should not be taking any reversal entries until what? Until what? What would confirm a reversal for me? Higher low, or higher high, or on the flip side for the puts, a lower high and lower low, or just a first lower high, right? Pivot confirmation, tweezers, okay? All sorts of things, right? But in the most basic sense, if it's pushing down right here, I need a higher low confirmation, right? So look at this. If any of you traded, no, VWAP break, no. That's too late. You're late to the party. Now, not all the time. If you get a VWAP break, see, like this wasn't a break. This was a rejection on VWAP, right? If we got a break and a base, right, kind of consolidation here a little bit, right, and then, right, and then it continues, right? But break of VWAP is not an entry confirmation at all. You will get stuffed like Thanksgiving turkey, bro. Like, don't buy a VWAP. Look what happened. Hey, VWAP's breaking. I'm gonna slap it. Right, you're dead. Okay, so moving through here, right? Look at this. If any of you traded calls in this downtrend trying to pinpoint the reversal, this is gonna make you feel a little foolish. Okay. Tell me where you see a higher low. Nope. 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 Oh, could get a higher low. Here's a bounce. But no dice, right? Okay. That's different. That's different. Right? That's a double bottom. You didn't get a pivot low break. What, guys? Guys, I want one of the members of the House of Stacks to explain why would you not go long on a VWAP break, right? Because I can explain it all day, but I really want to see you guys retain that. Why would someone not go long on a VWAP break? Shorts attack there. Here, I'll just put put the Discord in the thing. Shorts attack, shorts sitting there. It's your bad risk to reward. Oh, look, Denali's got a great point. Spent all day under the 200. You should buy puts anticipating rejection of VWAP. Defense algo. Algos enter. Exactly, guys. Exactly, right? At this point, if you're a retail trader, I'm trying to save you guys some money here. I really am. I'm trying to save you money, emotional suffering, right? Arguments with your spouse. Don't buy VWAP breaks. If you want to sleep on the couch, buy VWAP breaks all this week, okay? If you want to sleep on the couch and have beefaroni for dinner, okay? So look at this. All right. If we are extended, I said this, right? We're extended from VWAP. This, most of the time, longs aim for VWAP. I'll even say, hey, I'm aiming for VWAP. Anything over VWAP, that's extra money for me, right? That's just bonus, okay? You will only want to go long on VWAP unless you get a break, a base, and continuation. The base, right here, this allows you something to base risk off of. If you just slap calls right here, guys, right? They're like, oh, it broke. Where's your risk? Now, some traders would be like, hey, I'll stop out if it goes against me. And many times that's not good enough for a true kind of stop loss, right? Especially when we want to manage risk appropriately. This right here, who are you buying from? One, you're buying from the short algos that are hitting VWAP, right? Institutions love their VWAP algos. All right. Also, you're buying the calls that are juiced up from the traders who put in the work on the pivots, right? So what I mean by that, no calls entry over here, right? No calls entry because no higher low confirmation, okay? Calls valid due to double bottom. All right, let me make this a little bigger. Damn it. Okay. I have a YouTube video on pivot points if you want to check it out, right? Calls valid due to the double bottom, right? Why would calls be valid due to the double bottom? Because you have something to base risk off of, right? Hey, this just bounced. If it comes back, I'll take it, risking the low of day area. No candles close below the low of day. You take it. Oh, you missed the rip up, right? You missed your entry prior to the rip up. What do? Mark and look for your next pivot. Well, this is a pretty quick mid candle trade right here. Pops up, pulls back, got your golden zone, right? Absorbs the golden zone again and again. It's kind of freaky. But you can see, right? Double bottom, higher low. That's an entry. Pops up, hits the supply right there, pulls back. Look at this consolidation range, okay? Pulls down, another higher low. So you have how many confirmations? You have 1, 2, 3 confirmations to enter long. If you're going long here in these little areas, what is your target, right? A VWAP relief cover rally, right? You want to just get out on VWAP and hold a core, 25% or less of your position with a moved up or trailing stop loss, right? These are trades you will find all of the time because shorts will relieve this, right? They cover on top of each other. Hey, I shorted up here. I definitely want to lock in profit down here in this area. They pop up, shorts come back, they hit it again on VWAP. You get no higher low confirmation, right? No higher low confirmation up here. You just get a straight rejection. Okay, so that's a main reason. Also, looking at the time spent above or below VWAP, like we talked about earlier, right? Nothing closing above VWAP, nothing closing strongly above VWAP, and again, nothing closing strongly above VWAP, right? Also, what's another thing? Refrain from FOMO or chasing entry. So I want to talk about this range right here, this 30550 to 30670. Okay, so at this, you probably would have been trading your 306 calls. Now I'm looking at the 0 DTE charts from Friday. All right, and this is from right around 1150. Why do I have these marked? What the hell? Oh, this is from the other day, right? What the hell is going on here? Sorry, guys. Am I looking at the right chart? Hold on. We'll look at the, what is this? 306 calls, 1140. Okay, right here. I don't know why that chart was looking weird. I think I was on the wrong expiry. Okay, so right here, guys, same kind of look, right? Look at this, right? The arrow, I'll mark the 3 arrows where they are. Arrow, arrow, and arrow, right? These 3 arrows are the same. Let me move to the same drawing set, just so it's a little bit visually comparable. Right there. Okay, you can see you had your double bottom, you had your little low right here, right? They're practically the same. I mean, I think that's like 1 cent off right there. Okay, so I can just remove this, right? So these are the same. There's no reason to chase, because why? From the very beginning of the live session, I said takeaways from last week, many of us should solely be focusing on pullbacks or retests only, right? So think about this. I'm going to put this in the perspective of the chasing trader, okay? So this is the Monday's expiry, right? Tomorrow's expiry, if you're trading them Friday, which I do kind of recommend after 11 or near 12 o'clock. Let's say that you you buy this spike up, right? You buy this right here. Whoops. I'll mark it red, okay? You buy that right there. All right, you now have a price entry of 3.1, right? $310 per contract, around that range, right? And you bought here. Well, when it pulls back here, right? That's $260. You have now lost $45 a contract, right? Negative 45 con. Okay, that's over 10%, and really, right, much more than you should be taking on, especially since you have FOMO bought. Okay, now, had the trader waited, even if they missed this one, let's say that they moved this over here to the same thing, right? Let's say they bought the next pop-up and they got it brought back down to here, negative 45 a con. Yes, the trade ultimately works out in the end, okay? But, right, you had so many opportunities to buy in this 260 to 270 range, right? And you can look at the difference, right? Let's just say right here, right, from the peak, or not even at the very peak, but close to it, $112 a contract, right? In comparison to where you bought at the peak here, 310, right? That's only about $80, $75 a contract, right? You lost that $45 a contract, And it wasn't only the $45 per contract, right? It was also your emotions. Many traders would not have held through that, especially the shoving down and with the bias that they may have, accumulated towards the middle of the day just because of this downtrend here, right? You had so many opportunities. Focus on these pullbacks. Refrain from buying these big green candles on your 1 minute chart, 5 minute chart, whatever. And really, what's the rules, guys, right? Puts on the pop, calls on the drop, right? That you would not take calls on a pop and you would not take puts on a drop. Okay. Even here, right? Someone would have been like, hey, but what about this move right here, right? You wouldn't have taken puts right here on the breakout. I'm not a breakout trader, right? If I clear this out, look at the low of day. Is this not what I just said about VWAP, right? VWAP, you want to see a break and a base and then the continuation and you enter on the base. Okay. So what is this? This is a break of the low of day, a base, which where we should enter, which we did, and then the continuation to the downside, right? Where did I enter there? This is where I entered. The low of day, break, base, continuation. My stop loss is above the 20 EMA on the 3. All right. So, moving forward here, refrain from FOMO chasing entries, right? Pullbacks only. That was the kind of key, message that I was trying to portray with that example. And work on bidding in. So one thing that I really want to talk about is this. So right here, I think I had 308. I mean, we can look at it real quick on the 1 minute, right? Look at my 308p entry, right? Look at this. Higher low, right? Entered right here on the trend line. And look at this move, right? I think this gave me like $228 a contract, 200% move. And you can watch Friday's VOD and watch us do that trade right here, right around 10:15, 10:18. But if I clear it out, right? Clear it out, I want to show you something. I always want to show you guys something, right? That is the open low, and this is the low of day. Okay? You can see that they absorb under the open low. When I go to the 10 minute, look at that. Now, sure, you may have missed out on this is a different style of trading, right? This is bidding in, these are zones, this is not momentum, EMA based trading, right? This is patience. This is like fishing. And if you ever went fishing, right, you don't catch fish back to back to back, right? You're not at the firing range. You cast, you sit, you wait until once something bites, or you just pull the bid, right? Reeling it in. Okay? So, looking at this, you can see this lower wick. If you've attended some of the supply and demand sessions, right? You mark the lower wick as a zone. Would this not have given you a good enough range to enter on this chart, right? You can see the lower wick gives you from 113 to 88 cents, right? So what is that, about 25 cents? Yep, 25 cents. Okay, so $25. Let's say you bid in the middle of the zone, right in the middle, dead smack in the middle. You would have gotten the bottom, maybe not. Maybe you bid in a little bit higher. I just use that as a kind of basic example. I've taught descending bids to you guys, and that's how sometimes I trade. Not always, but I'll descending bid by joining the bid when it's in the zone. But right here, $1.03, well, 10 cents. That's about 10% of your position size, right, of the contract, or 15%, which would be 85 cents, right? Right here at the low, you risk 15%. Right here, 88 cents right below it, you risk 15% to make what? On the first pop, you just made $156 a contract, risking, right, that 15 cents, so 1 to 10 risk to reward, and you could have made over 100%. I'm not going to say you would have made 150, right? Well, let's say just right here on the pop, where there's a lot of price action going on, right? 120% you totally could have made, right? And that's just solely by bidding in, just waiting. Sure, you had to wait for this entry, right? They didn't give you this entry till 1 o'clock. Okay, till 1 o'clock. That's fine. Set an alert on the options contract. Wait. Sit there, chill. You don't have to force anything, okay? Also, during points of consolidation, like here, right? Let's say you would have been looking at the 306 calls. All right, I have the 306 calls right here. Let's go. Oh, no, right here. Send to 3 charts. What's this? 317. Okay, you had this little consolidation range. You also had some consolidation ranges here, right? You can look at this, right? You had a floor. I mean, I can kind of draw on the 10-minute to give you a better example. Right? I use these options contracts more than pretty much anything, right? You don't, now, remember guys, you can be pretty subjective with how you draw your zones. You could have drawn this lower wick or this lower wick if you wanted a tighter zone, right? You could have drawn this lower wick, extended it out, right? Look where you would have gotten filled in this zone, right? This is from 265 to 250, right? So a 15-cent zone, less than 10% from the peak, right? The peak right here, 265, that's 26 cents, and only a 15-cent zone, right? So less than 10%, probably about 6 or 7%, right? Let's say you try to get here in the middle, 260s, 10% is way down here, and that's 10%. I don't always cut at 10%, right? So, right, that's your 10% risk from entering in this range, right? 1 second. 10% risk from demand. Mark that red. All right, 10% risk. Okay, now, you risk 10%. Remember, I say you guys should aim for 1 to 2 at least. 1 to 3 is preferable for newer traders, right? 1 to 1 is right here. You already made your risk, right? 1 to 2 is right here. You can see it says 20%. Okay, 30% is right here. 1 to 3 now is achieved. 1 to 4, now you see it says 40% is achieved, right? And at the very peak, 54%, right? So 1 to 5 by trading in this trend, right? And it gives it to you again. You risk your 10%. Well, there's 10% right here. Your 1 to 1. 1 to 2 is right here. And at the peak, very top, not everyone's going to get the top, right? 25%, right? So 1 to 2 risk to reward at the very least, and you would have been able to make that or capture that and managing a proper stop loss, right? There's a lot of things that I could cover. I really want you guys to be able to just go into tomorrow with a fresh and level kind of mindset. Also understanding that every options trader begins at 0 tomorrow, right? Do not allow previous losses to deter you from, your goals on the week or your goals as a trader, right? Every trader goes through losses. The only ones that stick around, right, are the ones who can accept that and move on. If you're continuously trading, I need to make X amount of money back. I need to make, all my losses back this week. I need just one big trade and I'll be okay. You're really, giving yourself a kind of a, destination of failure, right? Because you're never going to be able to focus on the problems that you have at hand. You'll always be focusing on the problems that you previously had experienced without, the proper kind of tools needed at that given time, right? So go into this week, focus on your 5, 10, 15-minute time frames. Try to reduce or minimize the amount that you look at the one. I will always watch the one, but I always give strength to those 5, 10, and 15-minute time frames, okay? Also, if you're struggling, right, newer trader, I do not recommend any newer traders trading after or before the first 30 minutes. Mark out your 30-minute orb, right? Your first 30-minute candle. Okay, mark the orb high, right? You could have taken puts, risking the orb high, right? Nothing closes above it, right? I mean, look at this 30-minute chart. Nothing closing above the 9. I mean, it's such a clean kind of chart that traders are just disregarding, right? I say many times, you have all the tools available right here in front of you. I don't use any special scripts. I don't use any special flow, nothing. It's all right here in front of you. It's just about, proper analysis, risk management, and control of emotions, right? So I'm going to wrap the session up here, right? I will be live tomorrow morning at 8:30 in the morning. So I hope to see you guys here. I will stream on Twitch, right? It's still technically the first week of June. So, come prepared tomorrow to follow your rules, take profit, and manage risk. Always, guys, your goal as a trader should be to refine and almost perfect risk to where you become the best loser, right? I just showed you, right, on the stop losses. I stop out 1 minute, 2 minute, 3 minutes in, maybe 5 minutes in, right? I don't hold losses or bag hold time and time again, right? I've learned my lesson, and so should you. So, as you gotta watch QQQ and options on the 1. Yeah, I mean, I watch on the 1. You could always flip to the 3 or the 5 to kind of clean it up, right? Like seeing your wicks and stuff like that. Whatever it may be. So, but I will go through the giveaway for those of you who stuck around. And remember, guys, you have to be you can't be a member of the Discord, right? I try to do these to allow people who are kind of on the fence about joining or just want to get some more education going on, right? So keyword, we'll do QQQ, right? So type QQQ in the chat if you want to join the giveaway, okay? And I'll let that cook. Give it like a couple minutes, right? And if you've enjoyed tonight's live session, right, I do these live sessions every single, every single week, about 3 to 5 times a week. They're all recorded and uploaded into this Google Drive file. Now, not all of them. I have I have kind of refined this to where these are all the videos that I deem necessary to follow along with my style of trading. It covers supply and demand, 9 and 20 EMAs, how to hold winners, and how to cut losers, right? Risk management, how to trade 0 DTE or chop or consolidation. All sorts of videos here, straddling, strangles, right? Risk to reward. I mean, everything you could truly want just to day trade options from a very basic perspective, okay? Also, it is, what else? What else do we have here? Yeah, no problem, guys. Yeah, but remember, I will be live tomorrow morning, guys. If you guys want to tune in to the live stream, watch us and listen to us live trade. And I'm going to select one winner for the giveaway, okay? And whoever wins, please DM me on Twitch, and I'll get you an invite this evening, okay? All right, here we go. 3, 2, 1. All right, DTG 555. I don't know if you're a member in the group or not. You can let me know in the chat, and if you are, I'll re-roll it. Yep, what's up, investment? All right, is DTG in here? Subscriber. But if he is, make sure you DM me on Twitch to claim your 1-month membership in the Maplestax, right? So I appreciate everyone, and if you have enjoyed this live session, the access to the Google Drive, you have to join the Patreon link in the chat, right? It says it right there. All right, DTG, send me a DM on Twitch, brother, and I will get you an invite right after this ends, right? If you've enjoyed this live session, you can join the House of Stacks, which is my private Discord where I live trade and do EDU sessions just like this 3 to 4 times a week, every Sunday, and 2 or 3 more times, just reviewing charts, trades, and, covering, trading psychology and technical analysis. So there is the Discord link that I just posted. We did start the new Discord month for the month of June. And I hope to see you guys all on Twitch tomorrow morning, starting at 8:30 for the pre-market prep. I will cover over QQQ, NVIDIA, AMD, and SPY for those who trade SPY, and we'll go through trading just like we always do. So once again, I appreciate everyone and their time that they have given me this evening. You guys get some rest, get some water, and have a good night. Thank you, guys.